All right, guys, let's take a look at a commodity. We're going to look at the cotton market. And this is a market that I've been really tracking for several months here, going back to basically October. Been tracking the price of cotton on the way to the downside. I'm looking at the May contract. You can look at, we'll kind of go to the continuous contract to get a bigger picture here. We can see the full data. And I think there's going to be a buying opportunity in cotton. This is a longer term picture here, basically looking at the life or history of cotton. We've got a lot of data here, but we are now approaching price levels here in cotton that are getting relatively cheap from a value or fundamental perspective. And we're also seeing that the large specs, the funds that participate in the commodity market, talking commodity trading advisors, hedge funds, and the like, they are fairly heavy net short for this time of year, just based on history, about 33,000 contracts net short. And I've been looking at, I've been looking at the seasonality here of cotton as well and the expectations. So what I'm looking to do is try to find an optimal buy point right around here at the end of January, early February, and try to see if we can catch a seasonal trend to the upside. So I'm banking on riding cycle or seasonality or history here. I'm also banking on that we'll see funds start to short cover this market, which again is cheap from a fundamental level. See some short covering here. So I'm trying to almost kind of front run this, because by the time they get net positive, we probably would have missed the move. So we're trying to time some movement here from funds through, this is the COT, Commitment of Traders Data Report. And we're trying to align that with seasonal expectations. And then we're, of course, trying to align that here with price. So I'm going to be looking at the May contract. Let's go back to a daily chart. And you'll see that it's been kind of this, this slow, continual grind. But some of the selling, the bars, are getting a little bit smaller and smaller. So, you see some larger selling larger bars, larger bearish bars, bearish candlesticks, whatever. And then I'm looking for kind of all that momentum to stop and then start to see a move to the upside. So, if we're wrong, we're wrong, but this allows us to say, hey, we're going to get in or look to get a position maybe around here, and our risk is right here. Okay, so, we don't buy right here and then risk here. We're trying to find an optimal buy point. And this can be done through, there's a couple of ETFs. One that I found here that you may want to entertain is the Wisdom Tree Cotton ETF. It's traded for around $2.50, basically a penny stock. And so what I would be doing here is kind of looking and tracking the same pattern. I'm going to trigger off of the futures contract, but here is kind of a low risk entry point. And if this thing can get some legs, we'd be looking for target here and then target here to the upside in COTN. Now, I'm going to be hosting a free workshop about how we use the Commitment of Traders report. If you don't know what COT is, you don't know what CFTC is, all these government acronyms, I'm going to break it down here on how we can track and follow the smart money using these government reports and how we can apply that in not just the futures markets, but also ETFs and equities.